Welcome to the weekly market recap. Today is Saturday, August 22, 2026. What a wild ride on Wall Street this week. Stocks finished slightly in the red with the broad market sliding down about 1.48% overall despite a solid Friday relief rally. The primary driver behind the turbulence? Bond market jitters. Yields on 10-year U.S. Treasuries spiked up toward 4.74%, throwing cold water on stock market partygoers who were getting a little too comfortable near all-time highs. Sector-wise, defensive and energy plays wore the superhero capes. Healthcare led the pack, roaring ahead by 4,019%, while energy fueled up nicely with a plus 2.39% gain on higher crude oil prices. On the flip side, industrials took a nasty tumble of minus 4.23%. And utilities wilted by minus 3.65% as rising interest rates hit dividend-heavy stocks hard. Meanwhile, market sentiment is hanging out in lukewarm territory. The CNN Fear and Greed Index sits comfortably at 55, smack in the middle of neutral greed. Investors are definitely proceeding with caution, but nobody is hitting the emergency panic button just yet. The biggest storyline dominating the headlines was the dramatic jump in U.S. Treasury yields. The 10-year yield climbed up to 4.74%, stoking fears that persistent inflation concerns and heavy government bond supply could keep borrowing costs elevated. Higher yields act like gravity for equity valuations, pressuring big tech and growth stocks throughout the week. In brighter macro news, the U.S. economy showed surprising muscle. The S&P Global Composite PMI Index shot up to 56.0 in August, signaling the fastest pace of private sector business growth in over 4 years. While strong economic activity is great news for corporate earnings, it also signals to the Federal Reserve that there is no urgent rush for aggressive interest rate cuts. Corporate drama peaked as Boeing union workers overwhelmingly voted down a proposed 4-year contract offer and authorized strike action. This development adds another layer of operational headaches for the aerospace giant, pressuring industrial sector sentiment and keeping supply chain analysts on high alert. First up on our S&P 500 spotlight is retail titan Walmart. WMT shocked the market by reporting a rare earnings miss alongside cautious forward guidance. The stock plunged over 10% on the week, marking one of its worst single-week drops in recent memory and sparking fresh debates over whether consumers are finally pulling back on discretionary spending. On the flip side, discount retailer Ross Stores proved that value shopping is booming. Ross delivered a blowout earnings report, crushing Wall Street estimates on both revenue and foot traffic growth. Shares jumped over 8% as bargain-hunting shoppers kept cash registers ringing. Boeing lands on our watch list as one of the week's biggest stock movers, between white-collar and manufacturing union contract rejections and mounting strike threats. BA stock sank through the week, dragging down the industrial sector. Kicking off our small cap and mid cap movers is lithium giant Albemarle. ALB shares charged up by over 4.3% in a single session, benefiting from a sharp rebound in EV battery, metals sentiment, and renewed buying interest across beaten down commodity plays. Robinhood popped onto everyone's radar with a massive plus 6.3% single-day pump and strong weekly momentum. Hood benefited directly from the massive resurgence in retail crypto trading volumes as digital asset prices surged. When retail traders get hyperactive, Robinhood's bottom line lights up. Biotech favorite Moderna made serious noise this week, vaulting up nearly plus 8.8% on heavy volume. Positive updates around its clinical pipeline and expanding mRNA vaccine portfolio brought bulls back into the stock in a big way, making it one of the top trending growth tickers of the week. Let me pull up the weekly chart for SPY. The bulls successfully defended key support at $755 to $760 near the 50-day moving average, bouncing back on Friday to close around $765.75. Overhead resistance remains firm at the all-time high zone of $775 to $780. A decisive weekly close above $780 opens the floodgates for new records. Moving over to the tech-heavy QQQ, the ETF spent the week consolidating near lower bound. Key support is sitting solidly at $705 to $705. On the upside, bulls need to reclaim resistance at $725 to $730 to trigger a fresh momentum leg higher towards summer highs. Small caps in the IWM showed resilient price action. The Russell 2000 ETF held its critical breakout support level near $290 to $292, with total composure finishing Friday around $299.63. Resistance overhead sits at $302 to $305. A weekly close above $305 could unlock a major small cap rally. Crypto bulls had an absolute field day this week. Bitcoin smashed past the psychological $70,000 barrier for the first time in months, clocking its best weekly performance in over 2 years. The rally was fueled by positive SEC regulatory proposals and a landmark White House industry meeting. Key support now sits at $65,000, with resistance looming around $72,500. Ethereum wasn't about to be left out of the party. ETH ripped higher with a stunning plus 26% weekly surge, marking its best weekly gain since January 2021. Ether smashed through key technical levels, turning former resistance at $3,200 into rock-solid support. With the next overhead target sitting at $3,800, the broader altcoin market followed the leaders with an absolute moonshot rally. Solana and major DeFi tokens logged double-digit gains as capital rotated back into digital assets. Total crypto market cap expanded significantly, officially ending a 6-week consolidation phase. Looking ahead, overall market sentiment remains cautiously optimistic. While bond yields and macro inflation fears created turbulence this week, the late week bounce in equities and the explosive breakout in crypto signal that dip buyers are still actively supporting the market. Mark your calendars for next week because it's going to be explosive. All eyes will be locked on NVIDIA's earnings release on Wednesday, August 26th, the undisputed heavyweight event for the AI trade. We'll also get fresh inflation data and Fed commentary. If you enjoyed this market breakdown, smash that like button, subscribe to the channel, and hit the notification bell so you never miss an update.